Before I leave you guys to the video, this video is by Rob Smith, who is a floor trader for over 3 decades, and he was the one who invented all of the strat concepts, terms, and everything in between. So this is going to be straight from Rob, and I don't think this is content that's out there already, and I feel that everyone should get all the content we have. So let me know in the comments below if you'd like to see more videos like this once you watch it, and I'm going to leave you guys to it, so enjoy the video.
Hello, I'm Rob Smith, and this is the Smiths in the Black course, what we look for part 3. And so as we continue to build this course over time, we're going to continue to look for things and point things out. And I want to start this one today with training your mind to see things our way. Right? So I don't expect you to trade off a 1 or 3 minute chart or even a 5 minute chart, but what you can do is watch something very active and then say out loud what you're seeing, right? And it'll train your mind to see it. And then what you'll notice is that when you go to the longer term time frames, things become painfully slow, right? Because you're going to see there's a 1 minute chart of the SPY. And so as you go along, you're going to see this here. This takes out the previous low here. That's a 2 down. This is a 2 up, that's a 2-2 reversal, right? We've talked about in other modules, 2-2 reversal on the 1 minute, right? So you can see it, boom, 2 continuation, 2 continuation, 2 inside bar, the 2-1-2 reversal back down, right? And all of this happens here within 7 minutes, all this kind of stuff here, right? And so that helps you train your mind to see things our way. So when you go to a weekly chart or a daily chart, it slows things down, right? You're going to see this. 2 up by taking out the highs, boom, 2-2 reversal down in here. The inside continuation, 2-1-1-2 down, right? And if you go to the 3 minute, right, a little bit different. You can see this here, Rev Strat, inside bar, 1, 2 up, boom, 2 down, back through all this kind of stuff. And here you're going to notice this opened here, went up, was a 2-2 reversal because this was a 2 down, but then came to fail as a 3. So when this changed continuity and on here, this thing's going outside bar down to the downside. There's your 3, right? So very important to train your mind to see things our way, and then make sure that you're not trading on that, right? There's something we call the vortex of the intraday chart, where some people are led to believe that since I'm only day trading, I don't need to look at longer term time frames. That's absolutely incorrect. The way we're going to get really big moves is when you have the continuity and the signals on the longer term stuff, and then you break it down knowing what we already want to look at. You'll hear me say something called mother bar issues, right? And what that means is a mother bar is any bar previous to an inside bar. So here, this is an inside bar because it didn't take out either the high or the low. This is your mother bar. Right? And so what can oftentimes happen is you can get stuck in the middle of one. And price discovery works in a series of broadening formations. And so what will happen oftentimes is when you get stuck in there, that price discovery starts over again. And you're going to get killed in there. If you go to IRTC, you're going to notice this. Monthly here, it's just forming. This is not even closed out yet, right? But if you go to the weekly, here, you're going to see this big bar here. The question is, how are you going to get outside of this? And so what you'll see here is it goes inside, which causes this to be the mother bar, goes inside again. And if you look at the daily, you're going to see you're going to get murdered in here. You're going to get murdered in here. So always being aware of mother bar issues. That's why we're always looking at longer term charts, because if you don't do that, you don't realize that is occurring. If you go to JKS, you're going to see this. Here's an inside bar, inside month. This is the mother bar. How are you going to get out of here, right? And if you notice, then you go to the weekly, you're going to get murdered in here. You're going to get murdered in here, right? But we know that if you have longer term time frames that are bigger, over time, you're going to see it start to take out highs and lows, right? So you have an internal broadening formation within there. But look at this. You're going to get killed in here, right? This is what you want to avoid. So that's why we watch the longer term time frames. Other things that we look for is since we know that there's from one bar to the next, there can only be 3 things that can happen, right? You can only have an outside bar. Let's go to SPY, monthly. Only 3 things can happen. You don't take out either side and stay as an inside bar. You take out one side of the previous range, in this case, the highs of this, but not the lows. Or you have the outside bar, takes out both sides, right? We know that. So since we know that, there can only be so many combinations that can possibly happen of things that we look for. And we've talked about some of these previously, but we're going to go into a little bit more today. If you go to car, you're going to see this on the daily here. We call this Chicago, the area code here, 312. You're going to notice this was a 3 reversal. It took out the high and then changed continuity and went red to give us what we know would be an outside bar, which it did. Then it goes inside, right? And so when it takes out either side of this, in this case, this is a reversal because this is red, then inside and up. The magnitude is to go up and take this out, right? That's what we're looking for. The 3, 1, 2. You take this trade as soon as it takes out the highs of the inside bar with our magnitude up here, right? Now, depending on the time frame, oftentimes we'll use the low of this bar, depending on where it is, as it takes this out and then move the stop up to here, right? With our magnitude being here. 3, 1, 2, and you'll see this on several time frames, different ones. You'll see AMBA on the weekly. The 3, 1, 2. So in this case, the magnitude is only to take this out, right? And that's both. That's why we use multiple time frame analysis, because if we have full time frame continuity to the upside, which we did in this case, oftentimes they go a lot further, right? So that's one thing we look for. The 3, 1, 2. There's TWLO here. 3 by being outside of this, 1 inside, boom, we're going to take this guy out and off to the races she goes, TWLO, right? So certainly some people will trade just 3, 1, 2s because of the magnitude, knowing that we're going to take out that 3. And the reason we are is because we knew that from an outside bar, buyers were aggressive enough to pay up higher than the previous range and sell down. That means they're both aggressive. They were aggressive on the upside and the downside. Then they met in a consolidation, and then the real winner emerges. That's why that works. Another thing that we look for is called a kicking pattern. And what that means is that if you go to Redfin, right, you're going to see this. This is also an inside day. Now, normally we prefer this in old school terms. A kicker usually has to gap over the highs of the previous day. But in this case, what we look for, we call a kicker variation. So you're going to see about 80% of this day was red, right? So if you were short, you can stay short. It's going down, right? If you're long, you probably blew out. But then when you come back in and take this, right? Anybody short's got to spend the rest of the day covering. We also like to go back through previous ranges, like so, because we know that there's going to be stops here, 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 and here. We know that. We know how people have been told to stop themselves. So we like to come back to a previous range. What that does by stopping them out when we have all time frames green is that those stops remove liquidity, right? So anybody who's trying to buy, stops are going off and running the price in front of them, right? That's a good thing. That's why when you come back to a previous range, more often than not, that's the faster move, right? So kicker, 80% one color or more, and then a reversal. So if you look at John Deere, so this is technically what old schoolers would call a kicker. 80% red, gaps up. All these guys got to cover. So the thing about this gap is it went into the highs. Right? We call that exhaustion risk because we don't have any more pivots to get taken out. We'd like to have the pivots to get taken out. If you go to AGCO, AGCO, you can see that here too. This is what we're looking for. 80% red, back through previous range. We also call that the pivot machine gun. Boom, right here. Stop them all out in one shot, right? And we're always using multiple time frames. So if this works, what else will occur? And what you're going to notice here on the weekly, the outside bar of this. There's also an inside bar here. It's a 1 bar rev strat, 1, 3. So as soon as this thing goes green here, we're pretty sure this thing's going to go outside. So one of the things about understanding the magnitude on these things is to say here, AGCO opened the week at 119.20. When it took this out, right, above 118.72, it was still red on the week. But because we know to expect to come through all this, we can expect that to change back green. That's good. That means anybody who's short all week could stay short until that changed. This is going to cause that to change, right? So being able to gauge magnitude and then will that change continuity is something we want to know about for sure, right? Because a lot of people will get caught up and be like, I couldn't take it because it's still red on the week. It's also a Friday, all right? So if this works and it's coming through here, we're looking to take this out, right? So these two become an outside bar of all this. And as this goes, that's going to change the week. That's good. That's a good thing. Another setup that we look for is a 2-2 reversal after a 3. So if we go to Best Buy, you'll see this. Outside bar took out both the high and the low. 2 down, but comes back green. 2-2 reversal up. Because this, on a shorter time frame, is a broadening formation. Now, we know that price discovery works that way. Therefore, when you have a 2-2 reversal back through it, we're going to take that out. These two become the outside bar of that. If we go to tree, on the monthly, you'll see this. The outside month, by taking out both the high and the low. The 2 down by taking out the low but coming back. Here's your 2-2 reversal. Now this ran out of time, but didn't have a reversal against it. So then these 3 become the outside bar of that, because we know how price discovery works. There's your lower low, there's your higher high for your new broadening formation. So oftentimes many people will use this setup because of the good magnitude, right? You're going to take this out unless you have a reversal against you. So another thing that can occur, we call the Motor City Madhouse. The 313. That's Detroit's area code. So you'll see here on weekly INCY, and you're going to see this here. New high, 3 reversal. As soon as that goes here, going outside bar. Then the inside bar. And then it pokes up, but comes back in to be another outside bar. 3, 1, 3. Right? At this point, it's the failure here of a 3, 1, 2. So when it comes back into here and changes continuity, this thing's going outside. Right? So this is another thing that it can happen. One of the important things that I need to stress, we're always looking for combinations across multiple time frames. So if this works, fails and goes 3 here, what will that also cause? The monthly rev strat. Inside bar, 1, 2 up, boom, 2 down. We're looking to take this out, down into here, right? Once again, coming back through previous range, like NUS here. Pivot machine gun daily here, coming down. Back through the previous range. Take them all out, right? Off of a what? A 2 up, 2 down reversal. Right here. And if that works, what's that going to cause? It's going to cause an outside week. here when it changes and comes back through here. It's also going to cause this. The outside month coming back through. So we always want to use these multiple time frames. So if you look at something like NEE here on the weekly, one of the things we say is what's the next two? What will that create, negate, or do? So in this case, the rev strat, inside week, pokes up, 2 up, boom, 2 down, back through previous range, and go take this out, right? So on a daily basis, here's how we would time that. Looking for the 2-2-2 continuation. 2 down, 2 up, boom. As soon as it takes this out, we're going to take that out and probably some more because you got full time frame continuity. The downside, you're also reconfirming the rev strat week. So always want to be looking for combos. Another thing you'll hear me talk about is exhaustion risk. Right? Anytime you're going into new recent highs or lows, right, as opposed to coming back through a previous range, that means the buyers and the sellers either got to keep stepping up or step down because you have nothing to stop out anymore. So if you go to like GoDaddy here. So GoDaddy does this on the month. Exactly what we're looking for. The 2 up, the 2 down, the 2-2 reversal for these to become an outside bar of that. But it goes into new highs up in here. That's exhaustion, right? Because you don't have anything else to come through. So if you're long this, you want to defend over here, this high. Stay out of there. Because some people would say, oh, it didn't work. I'm like, oh, it worked. You just didn't step up. And then the way you would time that to make sure that you don't get hit on the way back down. 2-2 reversal day right here. So you can walk it up here. But you need to defend that once it gets up there. That's what we mean by defend. Once it gets up there. If we go to TLRY, you can see how this was blasting into recent highs, right? That's exhaustion risk. Right? Here's your 2-2 reversal. Boom. Now in this case, there's a big range, but that is a 2-2 reversal after going into new highs. So you want to be aware of exhaustion risk. Another thing you'll hear me talk about is hammers and shooting stars, or Momo hammers and Momo shooting stars. Right? So what's the difference there? So if we go to Tesla, so here you see Tesla gapped up and then hammered. So a Momo hammer is either going to be a 2 up or inside with continuity. A regular hammer is going to be a 2-2 reversal potentially. So what do I mean by that? So if we go to PSX. So PSX was green on the longer time frame, still coming up, and then an inside hammer. That's a 1. But it's still Momo because it's going to the highs. It's not a reversal. It's a continuation, right? So if you go to something like down in here, right, this is a 2 down, then up, right? And the hammer will be determined by the opening and close within the upper 33% of the range, right? Like if we go to a 60, you'll see this. Right? The 2 down, then hammer. That's a regular hammer. A 2 up or an inside with continuity is Momo hammer. Right? Same to the downside. So if you look at, say, Wells Fargo, Momo hammer because this was a 2 up. Right? Took out the previous highs. Right? So when we're trading these, you can take it as soon as it takes out the hammer. It's got to stay up. Right? It has to. And the reason it has to is because why this would work. Anybody who got short in here, right, is getting jammed and needing to cover. Now, when you have full time frame continuity to the upside, you also have buyers in there. So as soon as any time frame exhausts, you want to defend that tightly up into here. Because what can create there is if once everybody wants to get long is long and the stops are blown out, oftentimes it'll fail really quick as soon as this bar closes out. Right? So you want to defend that tightly when you see Momo hammer, Momo shooter. Right? It's also important to understand that hammers and shooters aren't inherently bullish or bearish. Right? So because of what happens here, if you go to Wells Fargo on the month, one might say, oh, it's a shooting star, it's going to be bearish and come back through. Not necessarily so. First of all, it has to confirm by taking this low out. Well, what can happen is you can blow out a bunch of shorts, right, and some ill-timed longs, but you might have your real buyer still staying down in here, right? Unless it breaks that. You might have a real buyer here who didn't get stock because it ran in front of them. Then they come in the next period, boom, I need stock, and off it goes. So you always want to remember that. You'll see it's very similar in AMBA here, Archer Daniels Midland. Very similar, right? So not inherently bearish. Once again, this is red inside shooter. That's a Momo shooter to the downside here, right? Just very similar, just going the other way. Just going the other way. And finally, for this module, another thing that we look for is a 3-2 continuation. This is a very aggressive strategy, okay? So what you're going to see here is the outside bar by taking out both sides. Then, boom, 3-2 continuation. And what that means is that this was a 2 up at one point, but got rejected and went 3. So when 3-2 occurs, this rejection is still happening, right? It can be very powerful, but you have to make sure that it stays below here. You can't let it come back into a 3. Once a 3, always a 3, can't not be, is what we say. And what that means is if they were willing to pay up and sell down, they might do it again, right? If you go to something like Coop. Coop did it on a monthly basis several times in here. Outside month, right? 3 outside months, right? So, and that got bigger, right? So you can get killed when you're messing with an outside bar. It has to stay out on a 3-2. If you go to UTHR, you'll see it here. Went 2 down, but then came back and changed continuity and was an outside bar. So this sell-off was rejected, and then it continued as a 3-2 up here. So that's some of the things that we look for, and I think that's going to do it for today. All right, I'm Rob Smith, this is Mr. Black Channel here at TikToker with the continuing Strat course.